So if you wanted to invest in, the absolute bleeding edge of global artificial intelligence, your first thought probably wouldn't be to fly to Japan and just like walk into a 140-year-old brick and mortar cable factory.
Right. Definitely not your first stop.
Yeah, I mean, you'd probably expect dusty floors, legacy machinery, and the kind of slow incremental growth that basically puts aggressive investors to sleep.
Exactly.
But then you actually look at the balance sheet and you realize this century-old metal bender is generating the kind of profit margins you usually, only see at hyper-growth Silicon Valley software startups.
It is honestly a phenomenal narrative. Welcome to the Japan Stock Podcast, everyone. Today we're taking a deep dive into what might be the most fascinating and frankly counterintuitive transformation story in the global market right now.
We are talking about Fujikura, trading on the Tokyo Stock Exchange under ticker 5803.
Yeah, and our mission today is to basically deconstruct exactly how a legacy wire and cable manufacturer engineered a staggering 32.2% return on equity.
Which is just, it's nuts.
It really is. And to map this out, we're leaning into a highly concentrated stack of recent data because, frankly, what this company was 5 years ago is entirely irrelevant to what it is today.
Right, totally different beast.
Exactly. So we're focusing on their February 2026 Q3 earnings materials, the massive March 2026 capacity expansion announcement, and their May 2026 shareholder notice, which launched the 2028 midterm management plan. Oh, and also their most recent sustainability metrics. The recency bias here is very intentional.
And as always, my role here is to advocate for you, the listener. We're going to take all these high-level macroeconomic shifts, the geopolitical friction, the dense financial engineering, and, translate them into what this actually means for the real world.
And I'll be mapping the causal chains for us, connecting the physical realities of data center construction to how that operational leverage ultimately pumps up the earnings per share.
So let's just get into it. The official corporate profile lists a bunch of things, right? They make optical fibers, electronics, automotive components, even some real estate.
Yeah, but we have to look past those surface-level product descriptions. If we apply the 80-20 rule here, we can cut through a lot of that noise.
Okay, so what do we cut?
Well, on paper, they do all those things. But if you want to understand where the profit is actually coming from, you completely bypass those minor segments. The real estate division, for instance, is bringing in roughly 11 billion yen.
Which sounds like a lot to a normal person.
Right, but in the context of their total operation, it's basically a rounding error. The heavy lifters are the Information and Telecommunications Systems division, alongside their electronics division.
Let's ground those divisions in the actual numbers because the scale is wild. When we look at the telecom segment in their May FY 2025 materials, it brought in a massive 653 billion yen in sales, or 6,530 million yen, as they denote it in the filings.
Yeah, the top line is huge, but the top line isn't the real story.
No, it's not. The operating profit for that segment jumped from roughly 92 billion to an incredible 152 billion yen. So, setting aside the corporate jargon, what is the actual, analytical definition of this company today? Because it's clearly not just a cable company.
Right. Underneath the hood, Fujikura has transformed into a pure-play, high-leverage proxy for global AI infrastructure and data center capital expenditure.
Okay, unpack that a bit.
So, the massive language models everyone is using right now? They require unprecedented amounts of data to be moved instantaneously. Fujikura's proprietary high-density cables and their advanced cooling technologies have become the literal physical bottlenecks for generative AI expansion.
The bottleneck.
Yes. If they don't supply the wire, the data centers just cannot be built to scale.
Right. So it's like, okay, if data centers are this massive system of highways, Fujikura isn't building the cars, and they aren't even paving the asphalt.
Right.
They've basically figured out how to build a 10-lane tunnel in the exact same footprint as an old 2-lane dirt road.
Mm.
And the traffic, the massive volume of AI data, it simply cannot scale without their specific tunnel.
That is a perfect way to visualize it. And building that specific tunnel is why understanding their corporate DNA matters so much right now.
You mean their history?
Yeah. In their integrated reports, management frequently cites their 140-year DNA of progressive spirit. But getting to this current level of profitability wasn't some seamless upward trajectory. They carry significant scars.
Yeah, I noticed that phrasing in the reports. They went through a brutal period over the last decade. Management calls it defensive selection and concentration.
Exactly.
What did that defensive period actually look like on the ground? Because it sounds painful.
Oh, it was. It meant taking massive write-downs and ruthlessly restructuring underperforming divisions. They had to deal with severe saturation in the smartphone market, which absolutely hammered their printed circuit board business.
Right, because everyone already had a smartphone, so growth just stalled out.
Exactly. And while some of their traditional domestic peers, like Furukawa Electric or Sumitomo Electric, pursued broad diversification into automotive harnesses or general electronics just to weather the storm,
Fujikura took the pain early.
yes, they did. They cut the dead weight and concentrated intensely on the optical communication choke point.
Which is interesting because the electronic supply chain is actually still facing headwinds today.
It is, yeah. But that period of defensive restructuring forged the structural armor they are wearing right now. They survived the pressure cooker, so they were perfectly positioned when the AI capital expenditure wave broke.
It's that classic drama of adaptation, isn't it? The companies that survive those near-death experiences are usually the ones best equipped to capitalize on sudden macroeconomic shifts.
Absolutely.
So let's look at how that armor translates to the financial causal chain, specifically focusing on that February 2026 data, because that's where the numbers get crazy.
Yeah, the February 2026 Q3 upward revision is what really forced the broader market to wake up. They projected a full-year operating profit of 195 billion yen,
Wow.
which represents 144% year-over-year growth, and net income was projected at 150 billion yen, which is 165% year-over-year.
We really need to unpack the mechanics of that, because a 144% growth in operating profit for a heavy industrial manufacturer is absurd.
It's basically unheard of.
Right.
Yeah.
You usually only see that in software companies where the cost of replicating a product is zero. Mechanically, how is a company that has to buy raw materials, manufacture physical goods, and ship them across the ocean achieving that kind of operational leverage?
Well, it comes down to the physical demands of generative AI and how their proprietary technology solves an intractable physics problem.
The space problem.
Exactly. To train these AI models, you need massive data throughput in incredibly tight physical spaces beneath the data center floors. And Fujikura holds a dominant position with their SWR and WTC cables.
Which stands for spiderweb ribbon and wrapping tube cable.
Right.
Let's actually explain how that works because the mechanism is fascinating. Traditional optical fibers are rigid and bulky, right?
Very much so.
So if you try to pack thousands of them into an existing underground conduit, they just jam up. But Fujikura's spiderweb ribbon technology literally weaves the optical fibers into an intermittent web pattern.
Yeah, it's brilliant.
It's the difference between trying to shove a rigid bundle of uncooked spaghetti through a pipe versus pulling a flexible woven thread through that same pipe.
And that flexibility means you can pack thousands more fibers incredibly densely into existing ducts without having to dig up the concrete to lay larger pipes.
Which saves data center operators massive amounts of time and capital.
Exactly. And because Fujikura has this technological monopoly on solving the density bottleneck, they command immense pricing power.
So the margins just expand.
Right. Once their fixed manufacturing costs are covered, every additional kilometer of SWR cable they sell drops a disproportionate percentage straight to the bottom line. That operational leverage is what aggressively pumps up their earnings per share.
And that leads directly to the metric that breaks Wall Street's mental models, the 32.2% return on equity.
It's staggering.
Let's put that in perspective for the listener. A 32% ROE means for every dollar of shareholder money retained inside the company, they're generating 32 cents in profit every single year. You usually only see that capital efficiency in asset-light tech platforms, not companies bending glass and metal.
Right. It's a software multiple on a hardware business.
So I have to play devil's advocate here. Is there a risk that this is just a cyclical peak, like a pandemic-style hardware hoarding boom by big tech companies that will eventually evaporate, leaving Fujikura with excess capacity?
I mean, the market perpetually fears cyclical peaks in hardware. That's a valid concern. But if you look at the May 2026 shareholder notice rolling out their 2028 midterm management plan, management is aggressively signaling that this is not a temporary blip.
What are they targeting?
They have set a long-term structural target of a 28.5% ROE by 2028. They are telling the market that their baseline profitability has fundamentally reset due to the permanent, ongoing infrastructure requirements of the AI era.
Hitting a 32% ROE is incredible, but in hardware, high margins attract fierce competition. You can't just rest on your laurels while holding that much cash. You have to deploy it to build a moat before rivals catch up.
Exactly.
So how are they weaponizing this influx of capital?
That leads directly to the primary catalyst for their future growth, which is the March 13, 2026 announcement. They aren't just doing incremental upgrades.
No, it's massive.
Right. Fujikura announced a staggering 300 billion yen investment to effectively triple their production capacity for optical fibers and their highly profitable SWR and WTC cables.
Tripling capacity is a massive, aggressive bet. Where is this physical expansion actually taking place?
It is a dual-pronged expansion. They are heavily upgrading their Sakura plant in Chiba Prefecture here in Japan, but a massive portion of that capital is flowing into their facilities in the United States.
Okay, the geography there is critical.
It really is, because if we break down their regional revenue exposure from the integrated reports, North America accounts for 40% of their revenue, while Asia accounts for 43%. The domestic Japanese market is only about 10% of their pie.
And whenever I look at a foreign manufacturer relying on the U.S. market for 40% of its revenue in 2026, my immediate concern is geopolitical risks.
Absolutely.
We are operating in an environment characterized by shifting trade protectionism, intense labor union volatility, and what the market broadly calls the Trump effect regarding import tariffs.
Right. The tariff threat is always looming.
So how is a Japanese company insulating a 300 billion yen physical investment from that level of cross-border friction?
By tying their corporate strategy directly to state-level geopolitical interests.
Okay, how so?
The U.S. expansion isn't just a blind push for market share. It is tethered to the October 2025 framework agreement signed between the U.S. and Japanese governments. Under the Strategic Bilateral Pact, Fujikura was officially selected as a critical supplier to strengthen U.S. AI infrastructure.
Oh, wow, that completely changes the risk profile.
Doesn't it?
Yeah. They aren't just a foreign vendor hoping to avoid tariffs while selling into the U.S. market. They have state-sponsored geopolitical insulation.
Exactly.
By building capacity inside the U.S. and creating domestic manufacturing jobs, they align perfectly with protectionist policies while securing a guaranteed demand pipeline blessed by both governments.
It neutralizes a significant portion of the regulatory and tariff risks that usually plague foreign industrials. It's essentially geopolitical arbitrage.
That's a great way to put it.
But, we also have to look at the other side of the map. Asia accounts for 43% of their revenue, which brings the complexities of the China market into play.
Right, because navigating the U.S.-China high-tech friction is basically a tightrope walk right now.
It's incredibly difficult.
China offers mature local supply chains, massive talent pools, and stable policy incentives for domestic manufacturing. But the U.S. export restrictions on advanced AI chips create a massive bottleneck.
Yeah.
If the chips can't go to China, the demand for the data center cables in that region could just stall out.
Yeah, and it requires extreme agility from management. In China, Fujikura is facing intense pressure from domestic Chinese competitors who are heavily subsidized and highly aggressive on pricing.
So how do we compete there?
Their strategy relies on localizing their supply chains to maintain resilience while competing purely on quality in the ultra-high-tier data center niche.
Right, the tier where the tolerance for failure is absolute zero.
Exactly. They are balancing the geopolitical demands of the U.S. with the operational realities of maintaining market share in Asia.
This level of aggressive expansion and geopolitical maneuvering requires serious financial discipline. Management is officially calling this era their fourth founding.
Yeah.
They're transitioning from the defensive selection of the past decade into what they call offensive selection and concentration. But I have to ask, how do you go on a 300 billion yen offensive without risking the stability of a 140-year-old institution?
It's an incredibly delicate capital balancing act, which is outlined clearly in their midterm plan. They are committing to this massive growth investment, but with very strict parameters.
Like what?
Well, they have pledged to maintain a baseline 50% equity ratio, though it's worth noting their Q3 data shows they currently sit very comfortably at 58%.
Okay.
And simultaneously, they are committing to a 40% consolidated dividend payout ratio.
So it's like watching a highly disciplined professional poker player operating at a high-stakes table.
I like that analogy.
Right, because they are keeping more than half their chips securely locked away in their pocket. That's the 50% equity ratio. So no matter what macroeconomic shock hits the supply chain, the company survives.
Exactly. They survive to play another hand.
But from that position of absolute safety, they are confidently pushing a massive 300 billion yen stack onto the AI infrastructure square, all while paying out steady, reliable cash to the shareholders who backed them. It is aggressive, but mathematically armored.
The 58% equity ratio gives them the freedom to dominate a generational technological shift without betting the survival of the company. It's the ultimate advantage of possessing a pristine balance sheet.
This brings us to a really fascinating evolution in their business model. We spent this entire deep dive dissecting optical cables and data transfer. But anyone tracking generative AI knows there is a looming Achilles heel that optical cables alone cannot fix.
Power.
Power, exactly. AI data centers are devouring electricity at a rate that is literally breaking local power grids. So how is Fujikura leveraging their core DNA, what they call their Tsunagu, or connecting technology, to address the energy bottleneck?
This is where their long-term R&D gets truly ambitious. If you dig into the May 2026 shareholder materials, you see a massive strategic focus on their energy business segment. But they aren't just looking at traditional high-voltage power lines.
What are they looking at?
Fujikura is actively channeling capital and engineering resources into fusion energy.
Wait, nuclear fusion.
Yes, nuclear fusion.
Let's ground this for a second, because that sounds like absolute science fiction, especially coming from a legacy wire manufacturer. Moving from fiber optic cables to futuristic, limitless, clean energy generation feels like a massive, frankly risky leap outside their circle of competence.
It seems like a huge leap until you look at the underlying physics and mechanics of a fusion reactor.
Okay, walk me through the physics.
So nuclear fusion requires magnetic confinement. You are essentially holding plasma that is hotter than the surface of the sun in a magnetic field so it doesn't touch the sides of the reactor and melt it.
Right, which takes a staggering amount of energy.
It does. And to generate magnetic fields of that magnitude, you need incredibly advanced, highly reliable superconducting materials.
No?
Yeah. If you look at Fujikura's value chain and their recent sustainability reports, superconducting wires is listed as a primary core technological asset.
So the physics of fusion energy actually rely on the exact kind of high-precision material science that Fujikura spent 140 years perfecting.
Exactly. The manufacturing prowess, the high-density precision, the metallurgy required to draw a flawless superconducting wire that can operate under immense magnetic loads without losing resistance, these capabilities are perfectly aligned with Fujikura's existing competitive advantages.
That makes total sense when you put it like that.
As data centers exhaust traditional power grids, stable, clean energy is becoming the ultimate choke point for the entire tech industry. Fujikura isn't pivoting away from their identity, they are executing the ultimate evolution of their Tsunagu DNA.
Wow. They spent decades building the technology to connect the data, and now they're building the technology to connect the massive amount of power required to run that data.
Precisely.
Let's synthesize this journey for the listener, because we have covered a ton of ground today.
We really have.
We started this deep dive expecting a slow-moving, traditional factory. What we've uncovered is basically a masterclass in corporate adaptation. Fujikura took the deep scars of a painful historical restructuring and forged them into the armor necessary to dominate a highly specific, incredibly lucrative choke point in the global AI supply chain.
Yeah, they really did.
They've parlayed the physics of high-density glass and wire into a 32% ROE, leveraged state-level geopolitical agreements to insulate a 300 billion yen capacity expansion in the U.S., and are now mobilizing their R&D towards superconducting wires to solve the looming AI power crisis through nuclear fusion.
They have transitioned from just reacting to global markets to actively shaping the physical infrastructure of the future. The structural reset of their baseline earning power is profound.
Thank you so much for joining us for this Deep Dives on the Japan Stock Podcast. We always want to leave you with a new framework for viewing the market.
Right. And when you look at the ecosystem today, the financial world is obsessively focused on software, the latest language models and AI startups. But Fujikura's 32% ROE proves a fundamental reality.
Which is?
The most lucrative bottleneck isn't always the code. It is the physical reality of the glass, the wire, and the power grid required to run that code. It leaves you wondering, honestly, if a legacy hardware maker holds the literal physical bottleneck to the future of artificial intelligence. How long until, flush with cash, big tech companies like Microsoft or Meta decide to stop buying the cables and just try to buy the whole 140-year-old factory outright to secure their own supply chains?
That is a fascinating thought. Next time you walk past a 140-year-old brick-and-mortar factory, well, maybe don't assume you know what kind of future is being built inside.